News channels daily give out sensational news in the world of finance. We have selected the 3 hottest news for you and will tell you more about them. News number 1. Musk became the first person in the world with a capital of over $400 billion. Elon Musk's fortune has surpassed $400 billion, according to Bloomberg News estimates, making him the first person in the world to reach that mark. While shares in Musk's Tesla-owned companies and robotics group have risen significantly in recent months, it was his private stake in SpaceX, the rocket company he founded, that lifted his fortune beyond that milestone. Bloomberg reported this week that the private sale of SpaceX shares has increased the company's market capitalization to about $350 billion, making it the most valuable private startup company in the world. Musk reportedly owns 42% of the company. When Tesla shares hit a new record high on Wednesday, Musk's fortune jumped to $440 billion, according to data compiled by Bloomberg. The stock rose to a record high of $424.88, surpassing the previous high of $414.50 set more than 3 years ago. The stock added nearly 6% at the end of the session. Musk's position as the world's richest man has undergone some fluctuations in recent years amid turbulence in Tesla's share price, but he has held the top spot since May. A separate index of billionaires tracked by Forbes puts Musk's fortune at about $369 billion, with Amazon founder Jeff Bezos in second place and Oracle co-founder Larry Ellison in third. A Delaware judge this month upheld an earlier ruling rejecting a compensation package for Musk that had already been approved by Tesla shareholders, citing a conflict of interest in their vote. Nevertheless, Musk's fortune has grown, even without that compensation deal, which is now valued at $100 billion. Musk has been focused on the presidential election for much of the year. Federal Election Commission documents show that he spent nearly $250 million to help Donald Trump get re-elected to a second term. Since Election Day on November 5, Tesla securities have risen 65%. News number 2. Bitcoin is trading back above $100,000 thanks to Trump and the Fed. Bitcoin returned above the 6-digit level of $100,000 in trading on Wednesday, resuming growth after 2 days of decline, writes Bloomberg. The new wave of buying is driven by signs that supporters of the cryptocurrency industry will help shape financial regulation in the U.S. under President-elect Donald Trump. Brian Quintenz has emerged as one of the top contenders to head the Commodity Futures Trading Commission, according to recent reports. Quintenz is head of policy at A16Z Crypto, the cryptocurrency division of venture capital giant Andreessen Horowitz. Bitcoin traded at $100,630 on Wednesday, holding most of the nearly 5% gain from the previous day, which was the biggest in 2 weeks. The rally had earlier stalled at $101,800. Trump's push to reverse the Biden administration's crackdown on cryptocurrencies in favor of looser regulation helped Bitcoin hit a record peak of $103,990 on December 5. Since then, the cryptocurrency has fluctuated around the 6-figure level. Strengthening expectations of a Fed rate cut supported investor sentiment on Wednesday. Speculators ramped up bets on easing after U.S. inflation matched forecasts. The prospect of easing financial conditions sent the tech-heavy Nasdaq 100 to a record high. The market is happy when inflation meets expectations, said Henry Elder, a principal at UTXO Management, adding that traders are trying to figure out if the $100,000 level is a ceiling or a floor. In addition to friendly regulation, Trump has also endorsed the idea of a strategic national Bitcoin reserve, though many question the feasibility of the idea. The president-elect's son Eric Trump said in an interview with Bloomberg Television that his father would be an incredible ally for the industry. Donald Trump was previously skeptical of digital assets, but changed his stance when the industry invested heavily to promote his interests during the U.S. election campaign. Republicans now have their own projects in the cryptocurrency sector. Bitcoin is up about 50% since Trump won the election on November 5, thanks to net inflows of about $11 billion into U.S. exchange-traded BTC funds during that period. Similar products for Ether, the second-largest digital asset, have raised $2.4 billion. News number 3. Goldman named 3 reasons for gold to rise to $3,000. Goldman Sachs analysts forecast gold to rise 11% to $3,000 an ounce by the end of 2025, writes Business Insider. The bank improved its forecast this week despite headwinds that have slowed the precious metal's recent rally. Gold, one of this year's leaders, has fluctuated recently amid gains in competing assets following the election of Donald Trump. For example, gold usually suffers when the US dollar strengthens, as it is now. The US dollar index is up nearly 6% since the start of the year, having risen sharply since October. We reject the common argument that gold cannot rise to $3,000 per ton by the end of 2025 in a world where the dollar remains stronger for longer, the experts wrote on Wednesday. The first factor they believe will drive gold higher is Fed policy. Goldman expects interest rates to fall significantly in 2025 and is one of the softest forecasters on Wall Street. They expect the federal funds rate to fall more than 100 basis points to a range of 3.25%–3.5% next year. In our base case scenario, we expect gold prices to rise 7% from a 125 bps per second Fed funds rate cut by the end of 2025, Goldman said. A long period of high rates is the main risk to our $3,000 an ounce forecast. For example, if the central bank cuts borrowing costs by an additional 25 bps per second, which would likely also strengthen the dollar, we estimate the gold price would only rise to $2,890 an ounce by the end of 2025. The bank said earlier that gold-backed ETFs have been gradually rising in the 6 months since the rate cut. The metal will rise in price as rising demand for ETFs increases pressure on gold's limited supply. Second, a stronger dollar will intensify the wave of gold purchases by central banks. Foreign institutions have been a major source of demand since 2022, after U.S. restrictions on Russia triggered a race to find alternatives to dollar-denominated reserves. Many countries have taken Western sanctions against Russia as a signal to diversify away from the dollar, boosting gold purchases by central banks. Goldman previously noted that this trend will continue, expecting foreign banks to add 30 tons of gold per month in 2025, structurally higher than the amount bought before Russia faced sanctions. While a strengthening dollar may pressure some emerging markets to hold their dollar reserves, Goldman expects major central banks to support weakness in their currencies by buying more gold. Key buyers such as China, with large dollar reserves and a long-term strategic interest in diversification, may even increase demand for gold during periods of local currency weakness to bolster confidence in their currency, the analysts wrote, noting that this is exactly what has happened during previous instances of yuan weakness. Third, gold and the dollar have a common reason to rise in 2025. While gold usually weakens when the dollar rises, it's because the greenback reflects economic strength. But this time, the dollar is rising because of international concerns, not because of expectations of higher interest rates. When trade tariffs, a key element of our 2025 currency forecast, with a longer-term strong dollar or broader geopolitical turmoil leads to a stronger dollar, the USD exchange rate and gold prices tend to rise together, Goldman said. As a result, we are seeing financial markets undergoing a real transformation. Musk with his space ambitions, Bitcoin with a new political benchmark, and gold that continues to strengthen in its quest for safety all look like the perfect combination for vibrant financial stories. Not only do these changes offer hope for continued growth, but there are many exciting developments yet to come. This was the first issue of the Financial Express, a weekly review of news from the world of finance. See you soon.